In this video, we're going to walk through a variety of markets and just talk about different scenarios as they happen. We'll start with the Dow E-mini. We use trend mode. That's when we apply the SMA filter, the 20 SMA. And this starts at 8:30 Central Standard Time, which is 9:30 Eastern is when the market's open. But because it's traded out of Chicago, we will always refer to this as Central Standard Time. All right, so we're looking for our first trade beginning at 8:30. And there's 827, and notice there's a short and then a long. So which one's going to trigger in first? You have to kind of be ready. On the short trade, you will move the entry down because the short is at 80. You'll move it down to 79. You also have to be mindful of the SMA, which is kind of going flat, so it's a little tricky. You have to keep your eye on it. It looks like that's going to trigger in. So the SMA is at 85.5. One bar before was 85.7. So it definitely went down. So before the bar closes, it comes up and hits the entry. The entry's at 95 though. So remember, you want to adjust it to 96, and you may want to even adjust it above. You have a major key level of 500. The problem with adjusting it all the way up to 501 is if you look to your left, you then have another little spike. And when you have layered adjustments, when you have to adjust into another adjustment into another adjustment, you're better off just not making any adjustments, okay? Apart from just getting off the 5 like we always do. And it ultimately, what happens is you end up with a brand new setup right there at 94. But that's still going to be 96 though, right? Because you still have to adjust up to 96. And it is going to trigger in. But let's just check the EMA. It goes from 0.5 to 0.3. So it went down. And when it goes down, you're going to cancel the trade. Then it goes from 0.3 to 0.5 and it goes up again. So this is going to trigger in. So that trade triggers in right there. Usually it's real cut and dry. A lot of times you'll just see the direction, but when it's going sideways, you have to be careful. You want to make sure you're getting in on the right trade. And your stop is here. And it comes down and actually stops out and stops and reverses. The only thing is you can't take that short trade. You know why? Because you're in the chop zone. You're in the chop zone, which means you can't go short when you're above the 50 EMA. And that, unfortunately, would have been a target one winner, but it's not a trade you can take. So you have a small loss, and you're waiting for another setup, and that comes here at 835. And clearly you can see the line is up. Now, you can come back to this area here and say, you know what, I still don't want to get long at 96, right below 16,500. And so it is possible you just don't take that at all. You could always make that decision too. But we'll call it a losing trade. Here's the next trade, and it triggers in. Actually, it doesn't trigger in. Because, again, you have to pay attention. When you click on that bar there, you don't see any targets. Because the histogram, the cyan line hasn't crossed over the yellow line. So you're still waiting for the entry. And the entry happens here, but the price closes up here. When it closes, that's when the entry happens. So you can grab that on a pullback if it comes back down to 16,506, which it does. Notice that stabs down to 06. So you have your order placed, you get filled, and then it moves up and up. Comes down to 7. So if you didn't get filled at 6, perhaps you have a chance to get filled at 7. Okay? And it comes up, you have target 1 is at 38, and it gets as high as 35. So there's nothing to do but wait. And ultimately it does pop up, and it hits 38 perfectly. So now the stop moves up. Your stop is down here below the signal line, and it comes down and stops out for a partial profit. And that was about 10 ticks. 10 ticks If you got out at target 1, which you may have wanted to do on a large trade, because look how big that target 1 is, that was good even after the adjustments. That was good for 30 points. That's a big trade. Okay, but it's one target 1 winner. We need to have 2 target 1 winners or a target 2 winner, right? So the next trade is, well, you can't go short because your indicator is up, and you ultimately get a long trade here. And it looks like, again, you see the dilemma that when you start adjusting, that trade's too small to adjust around that spike. You just have to go with the setup, as long as it's not on a 5 or a 10. It's on a 9, so you could adjust it up to 41, and you should. But even if you didn't, it still triggers in. But just out of habit, we want to make those key level adjustments around 5s and 10s, 5s and 0s. So 41's your entry. And it comes up and it hits target 1, target 2, target 3, and then the trailer actually does not stop out here. It comes up, it ultimately is going to stop out right up in here with the trailer. Okay, but that's enough to make you positive for the session with power of quitting. And that's the session. 3 trades, 2 winners, 1 loser. Let's go to the next day. All right, so here we are on Tuesday the 6th, and at 8:30 we're looking for our start time, and it's right here, 8:30. Now we are in the green trade. It has not hit money management, and it has not stopped out. So if it comes back down, you literally can get in sync with that trade, and it does. It comes down and it hits the entry. So you get long here. I know that's hard to do. It's kind of tricky because it's crashing down. That is not a short trade. That's just a warning sign, a heads up, right? No targets. Histogram hasn't crossed. SMA is up. So you come down, you can get in sync because it hasn't hit money management. Turns around, moves up, moves higher, hits target 1. Stop is moved up to here, and it stops out for a little partial profit. Let's just double check. 88. Maybe it didn't stop out because you're not going to move your stop to 86. Remember, if you're at a 6, you have to move it below the 5 to 84. So the stop will be at 84, which is right there, and it hasn't yet hit 84, and then it does. So there's a target 1 winner. Now, if it comes up again, you could get in sync with that other green trade, with that one, because that trade, even though we're in this trade, it hasn't hit money management. It hasn't stopped out. So if it comes up, you can get in sync with it. But you also have to think about getting short here if your EMA turns down. I mean, if your SMA, right, your directional moving average, this simple moving average, turns down. And look what happens. It goes up, and it literally triggers you into this trade right here. Now, I don't know if I want to get in at 95. I don't. Especially when that's at 95, and we know we go to 96. So 96 is your entry, and it triggers in, and it goes up. It hits target 1 again. So that's 2 target 1 winners. This will be the last trade, right? Your power of quitting trade, regardless of what you personally make on the trades today. You have 2 target 1 winners. That's the requirement to quit. But you keep trading, and you're now following the signal line. And you also have a stop at 97, locking in 1 tick. It gets as low as 700, bounces off the key level, pushes higher. Not quite. Does it hit target 2? Target 2 is at 28, and it gets as high as 27. So if you miss target 2 by 1 tick, you don't want it to come all the way back down. You could either quickly mark it out. You can put a fail-safe, move your stop to the target 1 at least for the, at least you get out at target 1, or you can just let the trailer hold below the signal line. You have various ways to do it. It's just a style question. I don't know what's the best way. They're probably all good. They're all going to have a different outcome every day, but they're all going to end up being good over time. That's one thing about the counterpunch. It's very hard to break this strategy. Even if you make mistakes, you usually could find opportunities to quit positive on most sessions. All right, so look, it goes up, and it actually hits 28. So it went from 27, and it stabbed up and hit the full target perfectly once again. I mean, I don't know about you, but when you see that enough, you start to realize, wow, there's something to this strategy. And that's another winning session, and we're done. And if you traded 3 positions on that first trade and second trade, you're literally raking in 144 points in total here. That's pretty darn good. All right, let's take a look at one more session. Let's look at the next day, and then we'll look at the Russell E-mini after this. That's another real good one. All right, so here we are. We're trying to start at 8:30, and we got 8:30 right here. So you have a setup at 8:19. There's 8:30, and then it comes up. Well, first of all, the entry is at 8:01. This one closes at 800 with a new setup. So that's your setup, and you get in at 8:02, and you have a possible stop and reverse, except that the line is up. So when your directional indicator, which is your SMA, is up, you're not going to go short. And look, it saves you from a losing trade. But let's look at the numbers anyway. 92 is your entry, but remember you're going to put a protection in there and put it in at 89. And it does stab down to 89. It goes as low as 88. So it would have stopped and reversed you. But because we're trading trend mode, you ignore the short trade because the SMA is up. Never goes down, stays up. You stay long, and it comes up and pushes through to target 1. And look at it hitting target 2 again. I mean, really? There it is perfectly. Too perfect. You want it to go 1 through it, so you know you get filled. This one comes off and stops out. You got to make sure you check your fills. But it's a target 2 winner. It's power of quitting. You're one and done. Even though you could trade up to 5 trades, not once did we have to do so yet so far. And we've hit, again, record profit levels 3 days in a row on the Dow E-mini. And that's how you do it. That's the difference between trend mode and standard mode. You have the SMA that's going to filter out some stuff. Works really good on the Dow E-mini. I'm not saying standard mode wouldn't work good. Probably would. And I'm not saying trend mode wouldn't work good with crude oil. I'm sure it would. It'll just be different. And some of you may actually want to try that. All right, very resilient, very versatile. Let's take a look at some Russell E-mini trades. All right, so here's the Russell E-mini, and I trade the Russell E-mini with standard mode. I don't use trend mode. So I'm going to remove this so it doesn't confuse us. Of course, we need a signal line. Not sure what happened to it. Let's put it back on. There we go. And this starts at 9:30. Now with the Dow E-mini, we can get in sync with earlier setups, but with the Russell E-mini, we're not going to get in sync. If there's a trade that hasn't triggered in yet at 9:30, we could take it. But if it's triggered in, we're going to wait for a new setup. And the reason why is because you just don't get a lot of pre-market activity on the Russell E-mini. So we want to wait till the market opens. Okay? So on this day, you had a little more than usual. Sometimes you only just have, a few bars. But here we are, and it's 9:30. Now I want to show you this session because I want to show you the power of the trade plan. There's a setup there, but it's before our start time. It didn't trigger in. We could take it, but remember, we're going to take the new setup just to keep it simple and have a rule we could follow. And that is at 1119.6. We're going to adjust that to 1119.4 around the key level. It's going to trigger in, and it just doesn't really get any traction. It doesn't get to target 1, and it goes up the other way, and literally you have an entry exactly on the stop. So your stop is at 1121.3, and your entry is at 1121.3. When that happens, you do not have to then adjust the entry off the stop to try to protect the short, because the short's already going to stop out anyway. So you can just take that trade at the entry. Okay, but it comes off and then goes up, and it does trigger in. So the first trade's a losing trade, and it looks small, but that's 19 ticks. So that's $190 per contract. If you're going to trade the Russell, you have to know what the risk is and how much capital you need. Okay, this is why the back testing is so critical. This is a market that's not for the faint of heart, but it could be extremely profitable if you have the fortitude to stay with it, and you're adequately capitalized. But it trades like everything else. I'd much rather be trading the Russell or the Dow Mini than the S&P, for example, which is a very difficult market to trade. Works great with counterpunch, but it's just there are inherent things in that market that make it very hard. And you'll hear us talk about that in the trade room. I'm not going to get into it here. All right, so anyway, 1121.3, and it makes a new high, barely. That's a high of the day, and it stabs right through, but then is rejected. But the stop is down here, and we're going to move the stop a little bit below because look at the swing level. That little stab on this bar right here is at 1118.8, and our stop is at 1118.9. So I'm going to move my stop on this, in this case, right below that little spike. Little adjustment down to 0.7. Okay, and that's just standard fare. You're going to want to be doing things like that. Doesn't matter because after it comes down, it goes back up, and we're still trying to get to target 1, 1123.1, and it gets as high as 11. Let's see, it gets as high as 1122.9. So it misses target 1 by 2 ticks, but then it stabs up and it hits target 1. All right, so there's a target 1 winner, but remember we had a loss. Meanwhile, you're moving your stop up, locking in 1 tick. This additional trade you might get in sync with, and when it comes up and hits target 1, don't forget that we have our stop at 1121.4. And so we're not going to take this trade until this purple trade's finished. And 1121.4 is down here. And so what happens instead is that it comes down and stops and reverses. And so you never have the chance to take this green trade. Okay, so I was looking at it going, wait a minute, that doesn't seem right. And it doesn't, because the trade plan is based on 2 positions, target 2 and trailer. Okay, so when you're trying to get in sequence, you want to follow what that trailing position would have done. In this case, it would have stopped out for 1 tick. The thing that threw me was this bar here that stabs down, but that only goes to 0.6, and our stop was at 0.4. It was still 2 ticks lower. Okay, so that keeps us from getting into the green trade, because then you get into the short trade. So that's the third trade right there. You want to be able to follow through and think it through so that you understand. We're not interested in that green trade because we were in the purple trade. Okay, so loser, target 1 winner. Now you get this small little trade. You can't do anything with it. Ends up being a loser. We need a 4th trade. So that brings us to here. And the entry is at 1123.5. Move it up to 0.6. 1123.6. This stabs up to 0.4. So you're good. That entry is breaking out to a new high of the day. And it triggers in. And it goes up and it hits target 1. It's target 2. And it almost gets to target 3 before it comes down and stops out. Now, unfortunately, when you add all that up, you're still down a little bit. Half a point, 8 ticks, I forget what, but you're down a little bit. So you have to take the 5th trade. And that comes here at 10:04. And it's going to trigger in. Actually, it doesn't trigger in. The entry's at 0.3. It gets down to 0.4. So that trade stays flat, and instead you get long. See how the breakout, the price breaking out, prevents trades? It's a good illustration of that extra confirmation of the price having to break through the setup bar and move a little further to get to the entry. And the 1 tick difference keeps you out of a losing trade and gets you into the long trade. Now, you probably want to adjust that up above the high of the day. That seems reasonable to me. So right there. Does it trigger in? Yes. So it triggers in, not at 0.8, but probably 1126.1 is where you would take that. Maybe even 1126.3. That might even be too big. You might not want to make an adjustment that big. You might not want to go from 0.8 to 0.3. That's a 5 tick adjustment. After looking at the numbers, you probably do want to get in right there at the entry. 5 ticks, $50 a contract. It's just too large of an adjustment. So we'll just say we're not going to make 5 tick adjustments unless you have a real compelling reason. And in an uptrend, I don't think that's a real compelling reason. Anyway, it goes through regardless of where your entry is, and look what happens. Target 1. Now you got to move your stop up below the signal line. Signal line actually holds because the stop is going to be not at 0.1 but at 1125.9. Remember, you work around the key level, work around the 0, and it stabs down to 1126.1, and the key level adjustment keeps you in the trade for another bar or more than another bar, because look, it literally keeps it going, and you get a winner to target 2 and a winner to target 3. Let's see, target 3 is at 1130 even, and it gets as high as 1129.9. So if you're trading to target 3, maybe you're going to take a fail safe at target 2 or just trail the signal line and stay with the trade. And if you do, it actually goes up and hits target 3 again perfectly. And that stop is now at 1128.8. And it stabs down to 1128.4. No, I take that back. The stop on the green bar is 1128.5 minus 2 ticks is 1128.3. And then it stabs down to 1128.4. So you literally stay in the trade, but then the signal line moves up to 1129, and you move your stop up to 1128.8. And that's where it gets out, 1128.8. And it's a beautiful trade. You're literally positive on the session, and you have power of quitting. All right, so that's a good walkthrough of a 5-trade session. Let's take a look at another one. Tuesday the 6th, 9:30. You don't get in sync, so you don't look at the earlier trade. You have a long trade right there, and it triggers in. 9:33, 1135.6, and it misses target 1, gets as high as 0.4, and target 1's at 0.7. Right? Actually, it gets to 1136.6. It misses by 1 tick. And remember what I said, if I miss by 1 tick, I'm going to move my stop, provided it went 10 ticks, which it did. It went 1135.6 to 1136.6. So I'm going to move my stop from here and then work around the signal line. So I'll put my stop at 1134.4. Make that adjustment around the key level, which is right there. So that's a few ticks of risk reduction basically. But then it goes up again, but it doesn't close above the signal line, so I can't move it up any higher, and it comes down and stops out at 1134.4. So again, the first trade's a losing trade. We have to take another trade, and it looks like it may be a short. Put the stop there, and it does trigger in. Let's see the numbers. Nope, 1132.5. Remember, we'll go to 0.4. It doesn't hit it yet, and it ends up going up, and instead it gets long. So we avoid a losing trade going short because of our key level adjustment off the 5 from 1132.5. 1132.4 avoids a losing trade, and you're starting to see the method to our madness. So we get a long trade, and it's at 1136.1. Move it up. Do we want to move it up all the way to here? It's a pretty big adjustment. I'm personally not going to do it. It pushes through regardless. You have to have confidence in the setups. Plus the high trend has given you a lot of information, isn't it? Anyway, it pushes up and it goes. It's misses target 2 by 2 ticks, so you don't do anything. You just keep your stop where it is. And ultimately it pushes higher and hits target 1. So now you're moving your signal line up. Your stop above the, below the signal line, trailing it up, hits target 2, not yet, and ultimately it crashes down. Actually, it doesn't quite get to target 2. But it's a really nice winner, partial winner, right? 3 points, the target 1's pretty good, and then you get 2.2 points as a partial. But you still need one more winner, right? You need a 2 target 1 winners or a target 2 winner. And you have to be positive. So we're not positive and we didn't meet our criteria yet. So you could take this trade here when it triggers in. Could you adjust that below the 50 EMA? You just got to look at the numbers. I mean, that would be a 5-tick adjustment. I wouldn't do it. I know it's hard, but I wouldn't do it because if it curls down, you can get into a real nice trade to the downside. So it stabs through anyway. Now we're under pressure. The stop is well placed. It's a counterpunch trade. You could expect after an action move down to have a reaction into the signal line to hopefully set up another action move down, and that's exactly what happens. And it hits target 1, hits target 2 perfectly, hits target 3 again. Well, maybe it misses by 1 tick. 1131.2 gets to 1131.3. So you could protect at target 2. And then, of course, you could trail the signal line down with any remaining positions, and it's ultimately going to get out over here. And a real big trade and a real successful session. Another winning session. Getting the theme of this? This is why trade plans are so important. Take a look at one more session. 8:30. That's at 9:31. So that's the one that triggers in right there. 1136.6. We might have to stop and reverse the short here, but it ends up going higher. So it never hits that entry. And the 50 is pushing up through the 200 and moving up. It's always nice to see that. Ultimately, it still is going sideways and kind of choppy, but the stop's down here. It's holding, and then it pushes higher, and it hits target 1, hits target 2, not quite target 3, and then stops out. Actually, it doesn't stop out because the stop is down here, right? Last bar to close above. So the stop's down here, then it pushes up, then we move our stop up, and then it goes up, and it hits target 3 perfectly right there as well, and then stops out here. And that's a huge trade. I mean, that's 2 points to target 1. This one here. 2 points to target 1, that's $200. 31 ticks to target 2, that's $310. 42 ticks to target 3, that's $420. If you're trailing, that's 28 ticks where that stops out, $280 per contract, right? One and done. Done with the session. All right, so a good look at 2 similar markets, the Dow E-mini and the Russell, one with trend mode and one with standard mode.